Wow, Bitcoin at $100,000. Did you ever think we'd see the day?
It's pretty remarkable.
This isn't just some tech world news blip. This is mainstream.
Yeah.
Yet if you're crypto curious at all, we're going to unpack what this surge really means.
It's certainly captivating, isn't it? What's fascinating here is that this price surge isn't just some random spike. It's the culmination of years of technological development, growing acceptance, and let's face it, some good old-fashioned market psychology.
So let's dive right into what might have caused this record-breaking price. And we had that huge Bitcoin conference in Nashville recently.
Right.
And of course, Donald Trump has been making some waves with his pro-crypto stance.
Those events certainly contributed to the buzz, wouldn't you say? High-profile endorsements like Trump's, especially in an election year, can really move the needle in terms of public perception. But if we look back a bit further, the introduction of Bitcoin ETFs in January was a real turning point.
Yeah.
It opened the door for institutional investors and everyday folks to invest in Bitcoin directly through the stock market. That kind of accessibility can really fuel demand.
Right. It's like Bitcoin suddenly became a lot more approachable for the average investor.
Exactly.
And of course, we can't forget about companies like MicroStrategy and Square, who've been snapping up Bitcoin like it's going out of style. These aren't small-time players. Their investments really legitimize Bitcoin in the eyes of many.
Absolutely. It's a signal that some major players see Bitcoin as a viable long-term asset.
Right.
It's a far cry from those early days when Bitcoin was seen as a fringe experiment. To truly understand where we are now, we need to trace Bitcoin's journey from its roots.
Okay, let's rewind the clock back to the early days of Bitcoin. Now, I remember hearing about Bitcoin Pizza Day, that really happened.
Oh, it absolutely happened. Back in 2010, a programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoins. It seems almost unbelievable now, considering those Bitcoins would be worth a fortune today. It really puts into perspective how much Bitcoin has appreciated over the years.
Talk about an expensive pizza delivery. So it wasn't always smooth sailing, was it? I remember reading about government crackdowns and those wild stories of exchanges getting hacked. It seemed like the Wild West out there.
Indeed, those early days were marked by uncertainty and volatility. The collapse of the Mt. Gox exchange in 2014 was a major setback, and China's various attempts to regulate and restrict Bitcoin sent shockwaves through the market. But these challenges also spurred innovation and resilience within the Bitcoin community.
I guess you could say that facing adversity can be a catalyst for growth and evolution, right? Even within the community, there were debates about how to scale the Bitcoin network to handle more transactions. This ultimately led to the creation of Bitcoin Cash and other forks, basically spin-offs of the original Bitcoin.
That's right, and these forks highlight the constant evolution and adaptation happening within the cryptocurrency space. Remember the Lightning Network? That was a big step towards making Bitcoin transactions faster and cheaper.
Oh.
But even with those advancements, questions about Bitcoin's scalability and its future as a mainstream currency remain.
Okay, so we've got this whirlwind history of innovation, controversy, and of course that incredible price surge. But what's truly driving Bitcoin's value? Is it pure speculation? Or is there something more fundamental at play?
That's the million-dollar question, isn't it? And it's not a simple answer. You've got the scarcity factor with a fixed supply of only 21 million Bitcoins ever to be created.
So is it like digital gold, finite rare, and therefore valuable?
There are definitely parallels to be drawn there. The built-in scarcity combined with growing demand certainly contributes to Bitcoin's appeal as a store of value. And then there's the halving process, which further reduces the rate at which new Bitcoins are created.
Wait, hold on, halving. Tell me more about that.
It's actually quite fascinating. Every 4 years, the reward for mining Bitcoin gets cut in half. Mining is the process that secures the Bitcoin network and verifies transactions. It requires a lot of computing power, and the miners who successfully add new blocks to the blockchain get rewarded with newly minted Bitcoins.
Okay, I think I'm starting to get it. So this halving process is designed to gradually decrease the supply of new Bitcoins over time, which in theory should increase the value of existing Bitcoins.
Exactly. It's a clever mechanism for controlling inflation and potentially driving up the value of Bitcoin in the long run. It's one of the reasons why some investors believe Bitcoin is a good hedge against inflation. Of course, there's a lot more to it than that, but hopefully that gives you a basic understanding of the forces at play.
It definitely sheds some light on the economics behind Bitcoin. But let's be honest, there's a lot of risk involved too, right? We've seen those wild price swings, and there's always talk of price manipulation.
You're absolutely right. Bitcoin is a highly volatile asset, and there's no guarantee that its price will continue to rise. Academic research has even suggested that price manipulation has occurred on some exchanges.
And let's not forget about those large investors, the so-called whales, who can move the market with their trades. So is it even possible for the average person to make a safe and informed investment in Bitcoin?
That's what we're here to explore, isn't it? We're going to take a closer look at the potential rewards and risks of investing in Bitcoin next.
Perfect. Stay tuned, listeners, because we're just getting started. Okay, so we've talked about the factors driving Bitcoin's price, and let's be honest, it can feel like a roller coaster ride.
Yeah.
But for someone looking to dip their toes into the crypto waters,
Right.
what are the potential rewards and risks of actually investing in Bitcoin?
That's the key question, isn't it? It's crucial to understand both sides of the coin before making any decisions. Let's start with the potential rewards. As we've discussed, Bitcoin has seen remarkable growth over the years. For early adopters, the returns have been astronomical.
Yeah, I think we all know someone who's bragging about buying Bitcoin for pennies back in the day.
Oh yeah, for sure.
But is it too late for the rest of us? Can people still get in on the action and potentially see those kinds of gains?
That's where things get a bit more uncertain. While past performance is never a guarantee of future returns, there are still many who believe that Bitcoin's price has room to grow. They point to the limited supply increasing adoption and the potential for Bitcoin to become a mainstream asset class as reasons to be bullish.
But on the flip side, we have to talk about the risks. I mean, Bitcoin is notoriously volatile.
Right.
We've seen massive price swings, and it can be quite nerve-wracking for even the most seasoned investor.
Absolutely. Volatility is a major risk factor. You have to be prepared for the possibility of significant losses. There's also the risk of hacking and theft. While the Bitcoin network itself is very secure, exchanges and online wallets can be vulnerable to attacks.
Right, we've seen those headlines about exchanges getting hacked and people losing their Bitcoins. It's a reminder that security is paramount in the crypto world.
What about this idea that Bitcoin is a bubble that's going to burst? I mean, we hear that a lot from skeptics.
The bubble argument has been around for a while. Critics argue that Bitcoin's value is based purely on speculation and that it has no intrinsic value. They believe that eventually the price will crash if people realize it's not sustainable.
So how do we separate the hype from reality? Is there a way to assess whether Bitcoin is a legitimate investment or just a gamble?
That's where things get tricky. There's no easy answer, and it really depends on your individual risk tolerance and investment goals. It's important to do your research, understand the technology, and carefully consider the potential upside and downside before investing any money. I've even heard some people compare Bitcoin to a Ponzi scheme. Is there any truth to that?
That's a pretty extreme comparison. While there are some superficial similarities, Bitcoin is fundamentally different from a Ponzi scheme. A Ponzi scheme relies on constantly recruiting new investors to pay off existing ones. There's no actual product or service being offered.
So with Bitcoin, there is underlying technology, a decentralized network, and a limited supply, things that give it at least some level of inherent value.
Exactly. While its value is certainly influenced by market forces and speculation, there are tangible aspects to Bitcoin that differentiate it from a traditional Ponzi scheme. However, it's crucial to acknowledge that there's still a lot of debate about Bitcoin's long-term viability. Even among economists and financial experts, you'll find a wide range of opinions.
So we've got the believers who see Bitcoin as the future of finance.
Right.
And then we've got the skeptics who think it's all going to come crashing down. Where do you fall on that spectrum?
I tend to take a more nuanced view. I think it's important to acknowledge both the potential and the risks of Bitcoin. It's a revolutionary technology with the potential to disrupt traditional financial systems. However, it's also a relatively young and unproven asset class.
Right. It's like the early days of the internet. No one could have predicted how it would transform our lives, and Bitcoin could have a similar impact on the financial world.
Yeah.
But there's also a chance it could go the way of the dot-com bubble.
Precisely. It's an exciting time to be following this space, but it requires a cautious and informed approach.
Okay, so let's say someone is convinced that Bitcoin is worth investing in. What's the best way to go about it?
Well, there are a few different approaches. Some people choose to buy Bitcoin directly through exchanges like Coinbase or Binance.
But there are also those Bitcoin ETFs we talked about earlier, right? Is that a safer way to get involved?
ETFs can be a good option for investors who want exposure to Bitcoin without the hassle of managing their own wallets and security. They're traded on traditional stock exchanges, which can provide a level of familiarity and comfort.
So you're basically buying shares of a fund that tracks the price of Bitcoin.
Right.
But you don't have to deal with the technical aspects of owning Bitcoin directly. That sounds pretty appealing for someone new to the crypto world.
However, it's crucial to remember that ETFs still carry the same price volatility as Bitcoin itself. You're not insulated from the ups and downs of the market.
Got it. So no matter how you choose to invest, you're exposed to that inherent risk. What about those folks who just want to hold on to their Bitcoin for the long haul? The so-called hoe dealers. Is that a viable strategy?
Hoe dealing has become a bit of a meme in the crypto world, but it reflects a genuine belief that Bitcoin's value will continue to rise over time.
It takes a certain level of conviction to ride out those price swings, that's for sure.
It certainly does. But it's important to remember that no investment strategy is foolproof. There's always a chance that the market could turn against you, even if you're in it for the long haul.
So it seems like the key takeaway here is do your research, understand the risks, and never invest more than you can afford to lose.
Absolutely. And remember, the crypto landscape is constantly evolving. What's true today might be different tomorrow. Staying informed and adaptable is essential.
Speaking of staying informed, let's shift gears and explore the bigger picture. What does the future hold for Bitcoin? Is it a glimpse into a decentralized financial utopia or just another speculative bubble waiting to burst? We'll tackle that question and more right after this. All right, we're back, and I'm really curious to hear your thoughts on this.
Okay.
We talk a lot about Bitcoin's past and present, but where do you see it heading in the future? Is it on track to become a dominant force in global finance, or is it destined to fade away?
That's a question that sparks a lot of debate, doesn't it? What's fascinating here is how Bitcoin is pushing the boundaries of what we think is possible with money and technology. Just look at El Salvador's decision to adopt Bitcoin as legal tender.
That was definitely a bold move. But it hasn't exactly been smooth sailing, has it?
Yeah.
The International Monetary Fund has expressed concerns, and the Central African Republic actually backtracked on its own experiment with Bitcoin as legal tender.
True, the path to mainstream adoption is rarely a straight line. But these early experiments, whether they succeed or fail, are incredibly valuable. They force us to confront the challenges and possibilities of a world where digital currencies play a more prominent role.
It's like we're witnessing a real-time evolution of the financial system.
Yeah.
And it's hard to predict where it will lead. So what are the strongest arguments for and against Bitcoin becoming a major player in the future?
Well, proponents often highlight Bitcoin's potential to offer protection against inflation and government control. They see it as a decentralized, transparent, and secure alternative to traditional financial systems, which can be prone to corruption and manipulation.
I can see how that would be appealing, especially in a world where trust in institutions is declining.
Right.
But what about the arguments against Bitcoin?
Critics often point to Bitcoin's volatility, its limited scalability, and its environmental impact. They argue that it's not yet a practical currency for everyday use due to transaction fees and processing times. And the energy consumption associated with Bitcoin mining is a growing concern.
So both sides raise valid points.
Mm.
It seems like the future of Bitcoin hinges on its ability to overcome these challenges.
Right.
But even if Bitcoin itself doesn't become the dominant global currency, has it already sparked a movement that's bigger than itself?
I believe it has. Bitcoin has ignited a wave of innovation in the field of decentralized finance, or DeFi. We're seeing the emergence of new cryptocurrencies, blockchain platforms, and decentralized applications that are pushing the boundaries of what's possible.
So even if Bitcoin doesn't become the king of crypto, its legacy will live on in the innovations it inspired.
Absolutely. It's like the invention of the personal computer. It wasn't the first computer, and it certainly wasn't perfect, but it opened up a world of possibilities that we're still exploring today.
That's a great analogy.
Yeah.
So as we wrap up this deep dive, what's your final takeaway for our listeners?
Whether you see Bitcoin as a revolutionary technology, a speculative investment, or something in between, there's no denying that it has fundamentally changed the conversation about money and finance. It's a force to be reckoned with, and it's worth paying attention to, even if you choose not to invest in it directly.
It's been a fascinating journey exploring the world of Bitcoin with you. And to our listeners, thank you for joining us on this deep dive. We hope you've gained some valuable insights into this complex and ever-evolving world. The future of finance is being written as we speak, and maybe, just maybe, you'll be a part of it.